Hey there, everybody. I am here with Matthew Hibler of Cherry Creek Mortgage. We have been getting a lot of questions recently since we've been in quarantine with this coronavirus issue. A lot of questions about mortgage and what's going on with people who have mortgages or might be applying for mortgages. And so we want to answer those questions that you all have. Right now, as of right now, it's April 16th, 2020. So these things change, but these are the questions that we can answer that we know as of today. Matthew and I have been working together since 2006. Matthew, can you believe it's been that long that we've known each other?
Wow, that's amazing. We look the same, exactly the same.
Exactly the same. That's so true. Thanks for the compliment. I do have one other question before we dive in. How much longer do you think you can go before you need a haircut?
About a half day. I'm hoping later today.
I just bought some trimming shears. I'm going to have to learn to maybe trim myself up. We'll see.
Oh, you look good. Don't fool yourself. You look great.
All right. Well, hey, let's start things off again. This is all that we know as of April 16th, 2020. First question has to do with interest rates. There's been a lot of volatility in regarding interest rates. Can you kind of shed some light on what's been going on there?
That's a great question, and it's a popular one right now. So really, in general, there's a few markets within the mortgage market, if that makes sense. I see it as conventional mortgages, jumbo mortgages, and then some government-backed debt. So conventional mortgages, $510,400 is a national limit right now. Mm-hmm. Jumbo mortgages being above that, and then those FHA, VA mortgages being the government debt. Mortgage rates in general on conventional mortgages are really low. We're hitting historic lows right now in the low 3% range. I have to state a range because your credit score and how much down payment you have will dictate the final rate, but they're new historic lows in the low threes. The jumbo market's a different story, and I think we're going to touch on that in just a minute.
Mm-hmm. Yeah, absolutely. Yeah, thank you for that. Now, there's been a lot of talk recently about forbearance on mortgages. I think there might be some confusion on, does that also mean forgiveness if you can't make those payments? Can you explain a little bit about that?
Yeah, forbearance is a less understood term. It's less commonly used. What forbearance is just pushing the payments out to a different period of time, so you don't have to make them right now as we're working through this tough time. Mortgage companies in general will entertain approval for forbearance. I think some of the mortgage companies want you to prove that you need it. In general, the terms are not extremely friendly, not as friendly as people would like them to be. But essentially, can I just push my payments out 3 months, or can you not bill me for 3 months? But then what most mortgage servicing companies are saying is, yeah, that's fine, we'll give you 3 months, but then you owe 3 months of that payment, the accumulation of at the end of the 3 months. So it's this big lump sum payment.
All at once.
All at once.
Okay. Yeah, I think that can be a big number, and especially for people who aren't able to make payments now, how are they going to come up with that money then?
It might not be that helpful. And the other thing that's dangerous is that if the mortgage servicing company decides to report that you haven't made those payments to the credit bureaus, you could be seen as late, potentially, on your credit report, which wouldn't be good things for your credit score. So if you need it and you want to try to avoid foreclosure, it's a good thing. But know that there may be repercussions on your credit history, and then also how do you come up with this lump sum payment in 90 days? It might be all the same.
And there's one thing we know about credit. It's easy to knock it down fast, but it's so much harder to bring it back up. It takes time.
That's true. Good
point. I
point.
also heard one other thing about forbearance, that you may not be able to refinance if you have a forbearance on your record. Is there any truth to that?
Yeah, there's a general underwriting regulation or guideline for the whole mortgage industry right now. And what it is if you have a late mortgage payment anytime in the last 12 months, it could make you ineligible to refinance or for any new mortgage for the next 12 months. Okay. And if you have more than one, your credit score will dramatically drop. And again, the clock starts over. You can't have a late mortgage payment typically in the last 12 months.
Ouch. Okay. Good to know, for somebody who, like you said, that might be needing to avoid foreclosure, this could be a good option. But beyond that, it can be dangerous.
And the other thing I'll add to that is the government may roll out a plan, to help homeowners if the late payments, accumulate to a large amount as a percentage of the mortgage industry. where people are really having a tough time, the government may roll out a plan. Here we are, we just dated this video. The plan's not there yet. Maybe something comes down the pike here, but it's so tough to say at this time.
We can hope. we can hope. Now, about jumbo mortgages. So I know there's been some volatility in that sector of the mortgage industry. Explain a little bit about that.
Yeah, the easiest way to explain that, in my opinion, is this way, that Fannie Mae and Freddie Mac receive assistance from the Federal Reserve. So, the board of the Federal Reserve over the last month has met and said, we promise to keep the mortgage market liquid and fluid. So we're going to buy a whole bunch of mortgage debt. Well, really all they can do for the most part is back those conventional mortgages. So Fannie Mae, Freddie Mac backed debt to mortgage lenders like ourselves across the country. So that's what the Fed is doing. But the jumbo mortgage market space doesn't have like a backing or a guarantee. And so it's on the private asset group or the bank, whoever the investor is, when you set up a jumbo mortgage. They're sort of on the hook for how that debt performs. And they then get to make more stringent rules or set their own guideline. And so right now, the jumbo mortgage investors, essentially the issue is they can't dictate what the risk is on writing a new mortgage debt right now. So because they can't assess the risk, how do you price that debt? And that's the question. So if you're a private asset group and you say to yourself, okay, I want to write new debt, I want to give new loans, and they do. So those jumbos will come back as they were to some degree later on this year or after we get out of this virus lockdown. But the jumbo mortgage investors are assessing risk going, well, we don't really know how many people are going to lose their jobs. And as a result, we don't really know as a percentage how many people might become late on their mortgage payment. So we have no idea what the risk is right now to write a new debt. So until we know what the risk is and we see how this all plays out, they just are choosing to freeze temporarily, figure out what the risk is, then they can properly assess the pricing or the rate going forward on those jumbo mortgage debts. So the jumbo mortgage market will come back. We just have to give it some time, and we have to figure out how bad is this really going to get as far as how many people are late on their mortgage payments.
Now, speaking for your company specifically, does that mean that you're not able to issue any jumbo loans at this time, or are there any banks that are allowing for that?
So we can do jumbo mortgages. The qualification standard just became more strict, or we're going to assess if somebody is well qualified enough to get a mortgage. I mean, it's part of the underwriting process anyway.
Sure.
So jumbo mortgages are available. It's just in the past, you might have been able to get away with, let's say, less than 20% down payment. And if you're applying for a jumbo mortgage now, you have to have a minimum 20% down payment, plus really good or high credit scores, so on and so forth. So the jumbo debt's available, just you have to be really well qualified.
Okay, that's very valuable to know. Now, one last thing about jumbos. Remind us again what the conforming loan limits are, and also for jumbo, what that threshold is.
Okay, good question. Well, so the conventional loan limit across the country, the national conventional loan limit is $510,400 for the year 2020. It changes every year.
Yes.
The Front Range of Colorado, most counties are considered a quote unquote high cost housing market. So the conventional loan limits are a little bit higher. So, when you look at that piece, $575,000 is the specific Front Range of Colorado, most county loan limit. So I would say, in general, to answer that question, it would be a loan amount above $575,000.
$575,000. Okay. Thank
exactly.
you for that.
I just want to clarify that that's the loan amount. So the purchase price could be higher, but if the debt amount that you need is $575,000 above,
and that's an important distinction there. Yeah. Now, what are you seeing specifically as far as mortgage applications? I've heard nationwide that they're down. What are you seeing personally?
Yeah, I'm seeing that too. Mortgage applications, especially for new purchases, are down. There's still activity though, so I do want to be clear. People are still preparing themselves as we come out of this lockdown to be ready to buy a piece of property. So there's some activity. It hasn't come to a standstill, I wouldn't say, but it is lower. I think, people just like mortgage investors, as I was talking about earlier, people just want to know, how bad is this going to be? So,
if they don't have to move, people are waiting, but there are still a lot of people that do have to move for various reasons.
Yes. Yeah. And, as it stands right now, you can still look at properties virtually, and, the photography and the virtual tours seem to be good enough that maybe people can make decisions that way.
Yeah, that at least helps. It certainly helps. So next question, I recently saw a major bank who announced that they, for all new mortgage applications, they're requiring a minimum 700 credit score and 20% down on all new applications. Do you see this as a trend moving forward?
Well, no, I don't. I think that that's true for now. And again, just the same as the jumbo investors assessing risk, the
Mm-hmm.
banks are also, even though there's backing on those conventional mortgages, the banks are saying, wait a minute, we need to be responsible. So maybe we'll keep our rates a little bit higher because we don't necessarily want to write as much debt as possible right now. Let's write some debt because the banks obviously want to have interest being received and coming in. They need that to be profitable and continue revenue. So they'll write some mortgages, but they might be increasing their interest rates just to be responsible on how much debt they're writing. And so, mortgage bankers or mortgage lenders like ourselves, we can price loans to multiple different banks or multiple different resources and still, navigate the market and get great rates.
Mm-hmm.
But if you're applying directly at a bank, there's just one rate at the bank each and every day. And some banks might have higher mortgage rates right now just because they don't want to just have a free-for-all of writing a whole bunch of new debt as they also try to figure out what is the risk on writing a new mortgage right now.
Okay. That makes sense. Yeah. I mean, so much of this is about risk right now and risk, assessment on all of this.
It is.
Sure. So last main question I have for you is, what impact are you seeing in the FHA and VA mortgage markets? And if you could just give a quick explanation for people, for those who may not know what those are.
Yes. So common theme here, everybody's trying to assess what the risk is right now.
Mm-hmm.
And the more risky mortgage loans have just become frozen. I like that term. It's frozen for now. It may thaw later this year and come back.
Mm-hmm.
And so what I mean by that is it was up until this outbreak and the economic lockdown and the unemployment rates jumping, it was so that you could have credit scores, around 600 to 620, let's just say, and still be approved to buy with a FHA or a VA mortgage. FHA mortgages being backed by the Federal Housing Administration, VA mortgages being backed by the Veterans Affairs Office, which are for veterans of the military or current, active duty members. So the VA FHA governing bodies are saying, okay, well, maybe we need higher credit scores for now just to be responsible on what mortgages we write. So what we've seen is an increased minimum credit score. 660, 680, has now become the new norm, where it was 600 to 620 as a minimum credit score.
It's a big jump.
It is a pretty big jump.
Yeah.
So the markets are still fluid. You can still get those mortgages. It's just that, again, you've got to be more well qualified than in the past few months or the past few years. Again, that might change. We've dated this video for a reason.
That's right.
Right now, it's just the minimum standards to qualify for the mortgage have just increased.
There's a lot of challenges that we're facing, but there's also some good things that can come out of this. And one of it might be that people who have lower credit scores, they can work on, if they can, making payments on time and raising that credit score, because that's only going to help them in other ways in the future. So, I mean, that's something that could be beneficial for individuals who are seeking a mortgage right now.
So great point, Zach. And while people are home, if they want to add to their new hobbies list as they stay home, one thing is you are entitled to one free credit report a year. There's lots of mediums to get that. So maybe you do that. Look into grabbing a copy of your credit report from one of the Equifax, TransUnion, Experian, platforms potentially. Pull through a credit report, study your report, and if there's some things that you can work on cleaning up right now, take the time and do it. And if you have the time to do it, maybe later this year you'd be eligible for an even better mortgage.
Absolutely. Some work right now hard work on that right now can pay off down the line big time. Great idea. Yeah. That's awesome. Well, thank you, Matt, for joining me today. We covered a lot here. There's a lot to consider. And, one of the themes here is risk and risk assessment by mortgage companies and it's important for people to know that the real estate and mortgage industry is still moving. It's just moving a little bit differently. We're having to shift and pivot how we're operating our businesses. But that is important to know that it is not completely halted.
That's right.
Yeah.
Such a pleasure to be here with you, Zach. Thank you so much.
Absolutely. Thank you so much, Matthew. And everybody, please stay home, stay safe. The longer we do, the quicker we get through this and to the other side and back to some sense of normalcy. So again, this is as we know it on April 16th, 2020. We'll see how things change in the coming days and weeks, but we thank you for tuning in. Thanks, Matt.
Thank you.